the Canadian dollar is a little bit lower right now. Let's get some reaction and analysis to this. We've got David Rosenberg of Rosenberg Research and Associates. David, thank you so much for being with us. Nearly 1 million jobs for the month of June sounds like a great number, but can you put that into context for us in terms of what was lost during the grips of the pandemic?
Right. Well, in the past 2 months, we basically have retraced 40% of the carnage that was imposed by the virus and, of course, the lockdowns. And so, look, there's reason to be, cheerful over the fact that the headline beat the consensus and that we're climbing out of a deep hole. But at the same time, that hole is still extremely deep. And whoever thought that, as you said, you'd create, 1 million jobs just about in 1 month, have the biggest 2-month snapback in employment in Canada on record. And here we sit today, and the level of employment is the same as it was in April 2012, more than 8 years ago. So things are improving. Let's hope it continues and that the reopenings will allow for more employment growth ahead. But it's going to take a long time before conditions here fully heal.
Yeah, David, will conditions fully heal, or what part of that number will end up being structural unemployment for a time?
Well, that's, I think that's really the key issue is the problem of the permanence of the job losses. And, of course, we know that's the case in the U.S., and it's also the case in Canada. And, you mentioned how the Canadian dollar didn't rally off the number, and maybe because foreign exchange investors are going through the fine print. When you're talking about the number of people in Canada, say, who believe that they're permanently employed, that number is 1 million lower than it was when the year began. When you're taking a look at the number of permanent jobs that have been lost, we're up to 582,000. We haven't seen a number that big in 26 years. So that's really the big question. And I think that there are going to be, and not just in Canada, this will be global and certainly in the U.S. as well, but the structural impairment in the labor market is going to be with us for a very long time period.
David, your former employer, Bank of America, putting out a report today saying that Canada is a very good contender out of the G7 nations for handling the COVID-19 response the best in terms of how the virus has been contained, the numbers continuing to trend down, as well as the state of the current economy. Given some of the things that you're talking about, the fact that there will see some structural issues, are there any policy measures that you think are not being explored, that should be explored in order to make that structural number as low as possible?
Well, look, I would counter that. I don't agree with that conclusion one bit. Canada went into this in much worse shape than almost any other country in the world. I know that people in Canada like to slap themselves on the back because the federal government debt ratio was barely more than 30%. But when you add in the federal government, the provinces, consumers, and businesses, Canada has one of the highest debt-to-GDP ratios in the world going into this thing. And there was no productivity growth. Really, the story in Canada, I called it the 3 Cs. It was condos, crude, and cannabis. But I would say that when you take a look at the Canadian economy going into this crisis, real per capita GDP growth was basically stagnant. So we didn't even go into this thing in very good shape from an economic standpoint. And I would say that Canada, yes, absolutely has handled the virus very well. The numbers have improved dramatically. It was really encouraging to see how Ontario and Quebec, which had lagged behind most of the rest of the country, accounting for 2/3 of the job gains in June, and that probably will continue. So the way that the virus was handled was, I think, very good at this stage. A lot of that is at the provincial level, and that's worked. But when you're talking about a situation in Canada where the federal government paid out $20 billion of income transfer over and beyond what was really needed from the income loss from the unemployment, just tells you, the extent to which fiscal resources were expended over and beyond really what was needed. But, what I'll say is that remember that as far as I can see, the only major industrialized country that's been downgraded by a rating agency so far has been Canada. So the federal government has blown a gigantic hole in fiscal policy, over $1 trillion of debt, a third of that being tacked on just this year. And I think that the problem in Canada is going to be that this deficit becomes structural in nature as opposed to just cyclical. So I think, yes, you can skate through as we did on the income side, but you can't pay people to stay out of work indefinitely. I'd be a lot more optimistic on the Canadian future from a productivity standpoint if the government embarked on some sort of infrastructure package. It doesn't have to be in bricks and mortar. It could be in broad services, whether it's health, cyber, internet, wireless. But I think at some point you'd like to pay people to work as opposed to pay for them to stay out of the labor force.
Right, but there has to be demand and work for them to go back to work first, David, right? So there's that. I just want to point out that you forgot a C. I'm surprised at you at the Canucks. You could have a four Cs phrase. But talk to us about the new central bank governor, because the Bank of Canada could fix all this in one fell swoop, just like the Federal Reserve did, no?
Oh, please. I mean, you don't, I mean, the bank, look, the Canada is not the United States. The Canadian dollar is not the reserve currency of the world. So, no, I would say that the Bank of Canada does not have an infinite balance sheet like the Fed does. The U.S. dollar is the world's reserve currency. The Federal Reserve has a printing press, and it gets its ink for free. Canada could at some point face a currency crisis because you can't run current account deficits and rely on the good graces of foreign investors as rating agencies continue to downgrade your credit rating. And I think that what happened from S&P a few weeks ago was just the thin edge of the wedge. So, no, I don't agree with the assessment that the Bank Canada can do is not a superhuman. I don't actually think that the Fed, these central banks really, in the final analysis, can do a lot from a liquidity standpoint. But as we're seeing already in the States, where you're seeing the speculative grade default rate go up to a 10-year high, no central bank is truly equipped to deal with solvency issues. They deal with liquidity issues, and I'd say the Bank Canada is dealing with liquidity issues, solvency issues, or something else altogether. And you just made the point before, and you supported my point without knowing it, which is that's right. I'm saying that we're having a permanence of job loss here. And then you go through a period of sclerosis, and if these people stay idle indefinitely, they lose whatever skills they had, they lose whatever incentives they had, and then they leave the labor force. And that's when you get these structural problems emanating in the labor market, is when you get that disengagement. So that's what I was saying before, is that, and this is what FDR got right in the New Deal, was in the New Deal in the 1930s, and maybe this is the modern-day depression for different reasons, but the point of the matter is that the New Deal put people to work in public works projects. People did not get paid to not do anything indefinitely, and I think that's something we have to keep in the back of our minds here, is that if the government's going to decide that we are going to pay people more than they were making before not to work, at some point we have to make a decision that we can put these people to work in some capacity. And insofar as there's no jobs to go back to, well, so much the better. If there is jobs to go back to, if companies stay alive, well, then it could just be part-time work. But the reality is that that's what goes into GDP. And it'd be preferential, I think, if you're going to build a bullish case for Canada, when you consider the hole being blown on the fiscal side, which is not really long-term productive fiscal expenditure, it's an income transfer. We can't do that indefinitely.
Yes.
And I'd actually prefer to use some imagination and creativity to actually get these people back on, even if it's on a public sector payroll, to contribute to economic activity.
Well, we will have to have another conversation on how feasible that is and when. David, thank you so much. Always love chatting with you. David Rosenberg, Chief Economist and Strategist at Rosenberg Research and Associates.